Unlike anything else on radio today, it's a front row seat for great information with today's leading experts. The Millionaire Maker, Hilary Kramer.
First of all, traditionally, what are we looking at in the final 2 weeks of the year?
Traditionally, everyone talks about the Santa Claus rally. That usually occurs after Christmas, between Christmas and New Year's, and I think this will be the case. This year as well. It's kind of discouraging. The last time that the Fed was tight was 2018, and we had an absolute disastrous December. And this is sort of like reminiscent of what we're having now. And obviously, a lot of traders threw in the towel following the Fed meeting last week when Jerome Powell just can't be moved. He doesn't care about slowing the economy. He doesn't care that there are definite signs of inflation slowing. He's just still, full speed ahead with making economic conditions tighter. Maybe a little bit more sensitive or a little bit more aware that things might be slowed down a bit than he was previously. But, it looks like we're going to have rate increases at the start of next year, too. And at that point, people just threw in the towel. I thought, the S&P 500 could hold its 50-day moving average at around 3,850. That wasn't the case. Now we're coming up to 3,800. And hopefully that holds over today and the next few days, just to get us to next week, where I think we'll do a little better.
You said that people call this the Santa Claus effect, but you said it comes after Christmas. Is that due to the massive reduction in pricings on things? I think
that definitely plays a role, Kevin. Sure, and people will look to mark up their positions, especially in small capitalization stocks. I would imagine this year, where performances are, of course, is pretty bad. There's going to definitely be an urge to try to get that done to some degree. So, but yeah, I think that's why the case is. Just trading slows down, and I think everyone who wants to sell, and then obviously there's a lot of people who want to sell, are going to be sold out by probably by Thursday or Friday.
It's very interesting to watch the activity over the last couple of weeks. I was speaking with some of my. You and Hillary and Scott, you're kind of like my stock experts, but I was talking to some of my precious metals experts, and they were telling me that almost no one right now is liquidating metals of any kind because they are on such a firestorm, and it's in direct proportion to the kind of volatile paper activity. This is making everybody really buy into what they've already got in their metals, and they're not liquidating.
Yeah, that's true. And I think, Kevin, what traders are trying to get in front of there is the feeling that the Fed will stop tightening at some point next year.
Well, and let's just be very honest. The Fed is the boogeyman in this entire equation, right? They're the problem.
Yeah. I mean, obviously,
they print money, they take it away, they give it back again, they take it back
again. Exactly. The policy is way too volatile. They had this under Yellen and Powell. They almost even had this theory: we will have zero interest rates until we reach full employment, and that in retrospect is kind of crazy and kind of led us to where we are now. I mean, he talked about tightening last year, early in the year, Jerome Powell did, and he was still buying bonds up to March. I mean, when it was apparent inflation was starting to really run rampant, he's still buying bonds. It's just no rhyme and reason to the policy, and it's very volatile. They'd be just better off just saying, you know what, we're going to have a rate of 2.5%. If inflation starts going a lot below that, we'll cut. If it starts going well above that, we'll rise. And just keep it constant like that instead of trying to be Superman, where, frankly, they've hurt a lot of average Americans in many ways.
Right. Well, if you're just joining us, friends, it is Monday night. We are talking with Steve Madonna from HilaryKramer.com. Steve is one of Hillary's top analysts. In fact, he does a lot of the research on some of the more complicated trading platforms and newsletters that they release, and has really good information. And in fact, if you're not subscribing to the 2-Day Trader or the 3-Digit Trader, I really recommend both of those products at the HilaryKramer.com website. HilaryKramer.com is where you can go to get those. But if you don't get those, there's a cost associated with those two. Start with the Trading Desk email, because that great information. Scott Martin puts that out, and that's absolutely free, and there's no reason why you shouldn't be having it. Welcome. It is Money Monday night. We are so glad that you're with us. Hilary Kramer definitively under the weather today, and she never, Steve, I know that you'll relate to this. She calls me, she goes, Kev, I'm not feeling well. And I said, I can hear that in your voice. She goes, do you think I should come into the studio and do the show? And I said, no, take it easy. Get some rest.
I talked to her around 12:30 today, and she told me about her condition. She did not sound well. And I know for her to miss an appearance on your show, she really has to be sick.
This is her favorite part of the week, and I hate telling her to do that, but we want her best. So if you're listening, Hilary, just know you're in good hands. Steve and Scott and the team, we're all going to take really good care of the audience tonight. All right, in the last segment, Steve Madonna, we were talking about the market conditions and whether or not a rally is going to ensue before the end of the year. And we kind of identified that the Fed is kind of the problem. And this is the only place in human history where I've ever seen the ones that are the problem also act as though they have absolute understanding of what the solution should be. And sometimes it seems a little bit curious that if they are that confident of the solution that they would have made the problem as bad as they did in the first place. But I digress a little bit. What are you anticipating, particularly with earnings, and what is the Fed kind of indicating it's looking at for next year?
Okay, let's start with earnings. I don't think the earnings that'll be out in the fourth quarter will be that bad. The one thing is, at least of right now, employment is very low, which is kind of like speaks favorable for financial stocks, which have taken a beating. And I'm sure there's going to be some higher credit costs next year, but there's still somewhat of a labor shortage in this country. It's not going to go away. And at this point, you have priced in a pretty good sizable increase in credit costs already. So I wouldn't be surprised to see the new year get off to a good start, led by the financials, which are the first company to report earnings. I think probably you'll see J.P. Morgan lead off either the first Thursday or the second Thursday of the year, and we'll take it from there. And that might set a favorable tone. And if the market stays depressed here, that you could get a little bit rally to start the year.
How's your 6 for 6 opportunity here? You've got 6 stocks in 6 minutes, and tell us all the good things about them. Where do we start?
I'll tell you one I just bought today for my personal account, Kevin. Equity Residential Properties, EQR. It's a real estate investment trust, specializing in apartment buildings. It used to be Sam Zell's company, very well managed. Good balance sheet, and it's been thrown out. I mean, there's been a lot of nervousness in REITs because, Blackstone stopped taking withdrawals from a private REIT they had, and it's probably caused a little unnecessary panic in them. EQR, the ticker symbol, it's got a yield now of 4.6%.
Love that.
Very, very, very solid history. And if the Fed decides to ease up, this one will do very well. It's a $58.93 stock now that started the year at $90 a share. It was only just $65 a share a couple of weeks ago before it got caught up in all this, panic about REITs, which is a problem. It's going to be a problem. It's going to be more some of the commercial, more speculative properties, but not apartment buildings. So I think that one looks pretty solid right here.
All right, 4 minutes left and 5 to go.
Okay, Cognizant Technology Solutions, CTSH. They provide technology outsourcing services from India. The company's got a solid growth record. It just seems like it can't get a break. Right now, they have a little problem retaining employees. They had to give up some. Jobs that they could have had this semester. But this year or next year. But I mean, it's 11 times earnings. It's got a solid long-term earnings history. Obviously, even in the higher interest rate environment, it's fine. These are services companies must have. There's going to be very little cyclical element to it. So go with that one.
And it's got a 2% dividend yield, which Hilary loves those yields.
Yeah, not bad. Yeah, not bad. I want to buy it for its yield, but it's just a very cheap stock, a very, very good company.
Okay. Number 3.
Okay. Number 3 is Brady Corp. The symbol is BRC. They make safety equipment and identification equipment, barcodes for a wide variety of industrial companies. Very high quality, very high return on equity, good cash flow generation. Again, this was a stock maybe close to $60 at 1.4525 now. It's a small cap company, so we do have a bit of a Santa Claus rally. You can get a bit of a jump of the stock near term. But again, this is a company that for listeners out there, they just want to buy and forget. It's a good choice.
All right, 2 minutes left and 3 picks of the 6 for 6 to go. What's number 4?
How about Bank of America? I mean, we talked about maybe credit not being as bad as people think it is, and I think there you go. That'll be a good a good way to play that. They are benefiting a lot now from the higher short-term rates. Should help earnings into next year. You know, it's around 9 times next year's earnings, even assuming a bit of a kick up in credit costs. So we can go with. I'm comfortable going with that one.
What's the symbol?
The symbol is BAC, Bank of America.
All right, and 2 left.
Two left. Where do we go here? How about we take another pretty cheap stocks. Fidelity Information, National Information Services, FIS. The stock's really been beaten this year. Everyone's afraid blockchain's going to take their business away. I think those fears are very much overstated. You know, it's selling for like 10 times next year's earnings. Again, a company with very solid history. You know, they process all the they process transaction for banks and for merchants. It's a big volume business, make a little bit of money in each transaction.
And your final pick, because we only got 15 seconds.
My final pick, as safe as they come, Old Republic, ORI.
Sounds perfect. Out of time, but he got his 6 for 6 in there. Stay with it. It's Money Night.